As we bring in Surat Sethi to talk about the markets, the jobs report tomorrow, and some equities that he likes right now. Surat, what do you make of these jobs numbers and the possibility that tomorrow's big report may show some slowing in the jobs market? Is that kind of inversely good news for equity holders?
I don't know if it's going to be good news, because I think what that's going to foreshadow is what are earnings going to do. And if companies are shredding, as we've seen, and you've seen a huge amount coming, at least starting in technology, companies are going to say, hey, we need to cut costs. And if we're going to start with wages, what's going to be next? Is it going to be CapEx? Is it going to be cutting back on travel? So I think that's where we're going to see the next quarter. Earnings season is going to be really important. We're in a quiet period, so you don't really hear anything. And I think that's where investors are starting to get a little more defensive, and you're seeing money move into healthcare, move into staples, and really kind of wait and see as to what the cyclicals are going to do, what are technology stocks going to do, and then also the financial services sector. And
you've also seen money moving into fixed income for a change, into T-bills and so forth, right?
Absolutely. And again, there was a wrench thrown in there, because when we had the quote, little mini banking crisis, people, it was an impetus to move money straight out of, sitting in 0.1% in a bank, because people were not sure it was confident. They were confident to be there. So money's moved into treasuries, money's moved into money market funds. And I think the wait and see period. Now, the counter of it, Tyler, is if you're a contrarian, there's so much pessimism out there, right? It's very negative. If you look at the yield curve, you look at what companies are talking about, but we haven't really seen that big issue. And maybe it comes with commercial real estate, maybe it comes with something else, but there could be some opportunities here, I think, if you're a long-term investor.
I see Steve nodding here a little bit. Comment or question?
It's interesting to think about what a soft landing is from the stock market point of view. You can think about it from an economic point of view, which is, the Fed is able to beat back inflation by without causing a recession or a major increase in the joblessness. I think the stock market way of thinking about it, I wonder what Surat thinks about this, is can you get through this process without a major hit to earnings? Do companies still remain profitable through this process? Because when you ask Surat, is this good news, is this bad news, be careful what you wish for, right? If I told you the Fed was going to cut rates, you'd be happy. But if I told you the Fed is going to cut rates because the unemployment rate's up by a percentage point
and
wages are not rising, the economy's not just slowing. And here's really the question. You think about landing a plane, you got to go through 10,000 feet, you got to go through 5,000 feet before you get down to the ground. What's happening, and I don't know if they have just a job growth chart in the back, a plain change in the payroll numbers, is we've been riding very high. 200,000, 300,000, we did that big 500,000 back in January. We need to get back to 100, 150,000. It seems to me the market has priced in passing through normal all the way to what was, remember the movie, it was Abnormal, passing all the way to Young Frankenstein, that was. Yeah. So, and getting beyond that and crashing right away, rather than the potential for the plane to level out.